The upcoming 2024 Bitcoin Halving is a momentous event that has captured the attention of the entire cryptocurrency ecosystem and financial world at large. Scheduled to occur roughly every 4 years, the halving is a core feature of Bitcoin's protocol, designed to manage its supply and ensure its scarcity over time. As the halving approaches, there is a whirlwind of speculation, analysis, and anticipation surrounding its potential impact on the market, industry, and broader economic landscape. To understand the significance of the 2024 Bitcoin halving, it's crucial to first delve into its mechanics. The halving entails a reduction in the block reward, which is the number of new Bitcoins that miners receive for validating transactions and adding them to the blockchain. This process is integral to the cryptocurrency's design, as it enforces a predetermined issuance schedule that ultimately caps the total supply of Bitcoin at 21 million coins. The halvings that have taken place in the past, i.e. in 2012, 2016 and 2020, have marked turning points in Bitcoin's journey. The 2012 halving, which reduced the block reward from 50 to 25 Bitcoins, was a relatively quiet event in terms of mainstream attention, but it laid the foundation for what was to come. The 2016 halving, cutting the reward to 12.5 Bitcoins, marked a point where Bitcoin was gaining more traction, with increased media coverage and public awareness. The post-2016 halving period saw a substantial price surge, ushering Bitcoin into mainstream consciousness. The most recent halving in 2020 brought Bitcoin's block reward down to 6.25 Bitcoins. This event occurred amidst heightened institutional interest and marked a significant departure from previous cycles. High-profile companies and financial institutions had begun to consider Bitcoin as a legitimate store of value and a potential hedge against inflation, adding a new dimension to the market dynamics. As we approach the 2024 halving, the cryptocurrency market has evolved in ways that set it apart from previous cycles. One of the most notable changes is the increased institutional involvement. Major financial institutions, including banks and asset management firms, have embraced Bitcoin as an investable asset class. Publicly traded companies have even added Bitcoin to their corporate treasuries. This institutional influx brings a level of legitimacy and stability that was less pronounced in earlier cycles. This institutional presence could influence how the market responds to the halving. While past halvings often saw retail investors driving the initial price rallies, the current scenario might lead to a more tempered and sustained price appreciation. Institutional investors are likely to have longer investment horizons, potentially mitigating the extreme volatility that characterized previous cycles. The 2024 halving takes place in a market that has grown in terms of sophistication and investor knowledge. As Bitcoin's profile has risen, so has the quality of information available to investors. This increased understanding could lead to a more rational and informed market response to the halving, reducing the likelihood of speculative bubbles and ensuring a more nuanced price trajectory. Investor sentiment remains driving force in the cryptocurrency market. Leading up to the halving, anticipation can heighten market sentiment, potentially causing short-term price fluctuations. Post-halving sentiment often shifts towards long-term perspectives, as investors consider the potential impact of reduced supply on Bitcoin's long-term value proposition. The 2024 Bitcoin halving arrives at a time when environmental concerns surrounding cryptocurrency mining have gained prominence. Bitcoin mining, particularly in proof-of-work networks, consumes significant amounts of energy. As the cryptocurrency industry faces increasing pressure to address its carbon footprint, the halving could serve as a catalyst for discussions around sustainable mining practices and the adoption of greener energy sources. Some cryptocurrency projects are already exploring alternative consensus mechanisms, such as proof of stake, that require significantly less energy than proof of work. The spotlight on environmental sustainability could encourage the broader industry to innovate and adopt more energy-efficient solutions. The 2024 halving occurs against the backdrop of a rapidly changing global economic landscape. Central banks around the world are experimenting with unconventional monetary policies, including unprecedented levels of quantitative easing and low interest rates. In this context, Bitcoin's narrative as a potential hedge against traditional financial instability gains prominence. As the cryptocurrency market becomes more integrated with the traditional financial system, the 2024 halving could see heightened interest from investors seeking alternative assets to diversify their portfolios and protect against potential inflation. The upcoming 2024 Bitcoin halving is a milestone event that carries significance far beyond the confines of the cryptocurrency world. It is a testament to the endurance and resilience of a technology that has disrupted traditional financial paradigms. The halving's impact on price, investor sentiment, adoption, and the ongoing discussions around sustainability will shape the narrative surrounding Bitcoin's trajectory in the years to come. While historical patterns suggest that halvings are associated with price appreciation, the intricate interplay of factors in today's cryptocurrency landscape adds layers of complexity to any predictions. The increasing participation of institutional investors, market maturity, environmental concerns, and macroeconomic context all contribute to an evolving narrative that extends beyond supply scarcity. As the countdown to the 2024 halving continues, market participants, enthusiasts, and observers around the world eagerly await the outcomes and insights this event will offer, both within the realm of cryptocurrency and the broader global financial ecosystem.